And so your reference frame is a piece of paper, and you're only happy if that reference frame is going up relative to the piece of paper. But if you actually understood what's actually happening in Bitcoin and how fast it's expanding and what the emergent properties of it are becoming, you would not be salty at all. You would be feeling incredible.
Is it in terms of negative sentiment or all those things, is it because of the fact that gold has been going so well? Or what is gold telling us that Bitcoin is likely going to follow?
So this is actually why, for me, the question is really a different, and we have to break down the question and understand what it would look like.
Sure.
Right. So because you're comparing Bitcoin to a whole bunch of other things, right? And so let's use that analogy, and let's go through that analogy of your frame of reference on what Bitcoin is. And how your frame of reference would determine that outcome or your view of what reality is. So let's imagine your frame of reference is Bitcoin is a technology, right? And if Bitcoin is a technology, that frame of reference would have you constantly looking at the next technology that would replace Bitcoin. And from that point, and that would be a normal thing to think, right? Because most technology moves, and technology is a winner take most until the next technology replaces it, until the next technology replaces it. So you'd fall into traps of Bitcoin's slow, can't do these things. It's open, so it's no privacy. You'd fall into these traps that would take you to other coins, right? So, but it would be a totally normal frame of reference, right? Because we see technology more often than we see protocols, right? So that one frame of reference, it's just a blockchain, it's crypto. Crypto is the same as Bitcoin, and there's 10 million Bitcoins. And that would be normal from a whole bunch of people measuring something new that they'd never seen before. So not right, not wrong, just normal. Fair? Now take a different frame of reference. Bitcoin is an asset, right? And that frame of reference it's a better asset than gold. Gold is a better asset than Bitcoin. All of these fundamental frame of references would compare things inside that frame of reference, measuring those things from a piece of paper. And where did the piece of paper achieve its value? So if you just say, what is an asset? An asset is everything we've ever been able to measure because money was broken. We couldn't store our money in money. So we put them in assets. Those assets became centralized over time and then changed to money. So gold constantly rebased or got stolen from you because it's centralized. And you held your money what you believe your money is in something else tethered to the asset. Right. So if you believed Bitcoin was an asset, you would be likely to hold your money in a derivative asset of Bitcoin, and you'd be likely to price Bitcoin from that derivative asset. It would be totally normal, right? What would that look like to you? You would be comparing against gold, silver, all of these other things all the time, houses, oil, the entire works, and wondering, why is it not going up as fast as this? Why is it going up faster than this? And you'd be stuck in this time frame inside that loop of all these things where money was still broken. You still had an inflationary monetary system that had to consolidate. And all of your actions would be just Bitcoin's faster horse inside that consolidation. And if you did, you would probably take risks in ETFs. You would take risks in everything else because you would be still pricing from within the construct you've always lived in. Fair?
Yes, that's a very clear explanation. Yeah.
Okay. Now, another explanation, and this is where I am. Bitcoin is a protocol, and what you're measuring as Bitcoin is just layer one of a protocol, right? And so what you're measuring as Bitcoin and the store of value is just the first layer. It's an energy-backed protocol that's decentralized and secure. And one thing we know about protocols is they come in layers and they offer more functionality in layers, and they're winner take all. So if you explore that from a different frame of reference, the frame of reference that I'm in, now you could question this frame of reference. You should question this frame of reference, but if you explored it from that frame of reference and you looked at another protocol like the internet, the beginning of the internet came, I'm going to simplify it a bit for your listeners, but it came at the beginning, TCP/IP, right, which was developed by DARPA in the late 60s. And I just simplified that take, but that was the first layer, the transport control protocol. And it was, it was so you could keep communication up in a nuclear holocaust. And it was so narrow that you couldn't do anything else. It was just that. But because it was open and anybody could build to it, it came in layers. And what you know of the internet today, what's driving this Riverside that you're on today, that we're on today, is on top of HTTP, that's just 4 layers on top of what TCP/IP, that wasn't invented until 1989. And so the internet you know, and all of the mistakes, even from 1989 to today, that people built on top of it, is the same fundamental stack that came in layers. And the same path to get there had all of the same, I'm going to build my own internet, I'm going to build my own this, I'm going to build my own control system. But the open protocol took everything. One internet. If you want to use that internet in China, North Korea, anything else, and if you have a VPN, you can see the entire internet. Fair? Mm-hmm. Winner take all, not winner take most. And protocols are very different than technologies or assets. And so if you view it as a protocol, and you knew that why they're so mistaken is because in the narrow time frame where Bitcoin is when you're measuring it, it can only do this narrow thing and it can't scale. That would feel right for the time. So if you took a Bitcoin from 2009 to 2020, you really didn't have payments on top. And then that would have this explosion of people who would try to say, Bitcoin isn't good enough. I'm going to do something else, right? Because it can't do this. And then you'd have this different group of people that would be building on top of it, and it would be clunky. It wouldn't work. It wouldn't, and then it would be ossify. And then on top, you'd have a payment layer. That payment layer today is Lightning, Liquid, Arc, Spark, a bunch of others. That now it's moving. It's not just an asset. It's a monetary network, and it's moving and it's expanding crazy across the world. We're investing in companies that are growing so fast, and they couldn't grow that fast unless the money was being moved in Bitcoin. So, but if you didn't observe that, if you observed it as an asset, you would be totally blocked from what's actually happening. And so I view it as a protocol that cannot be changed, that is building in layers and adding more functionality, that is repricing all of the other nonsense in the world. But I do understand why people would view it differently, and they're welcome to. But every time they view it differently, they're also taking risks because they're inside the other system.